You were listening to Charting Wealth's comprehensive review and forecast for the week beginning Monday, the 18th of December, 2017. Let's jump into these charts. We saw the week end up on Friday, 0.32%. That's not for the week, but that's on Friday. On the S&P 500, the Q's up big on Friday, 1.14%. Big gain on Friday. We saw TLT up also 0.38%. Beautiful after we had our weekly vertical crossover going up. And of course, gold, which had been going down, ended the week up a little bit at 0.21%. Now, let's jump in and analyze these charts. What happened over the week? What might be going on in the new week? We see 4 weeks of strong up movement in the S&P 500. We see that the derivative oscillator is moving up and the price percent oscillator is continuing to move up. Maybe not as strong as it had been back on the week ending the 1st of December, leveled off a little bit, but still moving up quite nicely. And don't forget, at the end of December, we have another end of quarter, and we'll be doing that special quarterly long-term investing podcast for you. And you have to be a member. Go to chartingwealth.com, sign up for the daily market reviews. Well, of course, every week you'll also receive the comprehensive review and forecast and the new chapters in the book as they come out and all the new training first. So that's what we see as far as the weekly chart goes. As we dive into the 2-day chart on the S&P 500, we see that the latest candle that was completed also on Friday on the 2-day chart is a down red open box candle. Again, basically sliding sideways as far as the 2-day chart goes. The real up movement was that 2-day candle ending on the 13th. And we also had nice up movement for the 2-day candle ending on Monday. So that reflected both the prior Friday and Monday. And the 2-day candle on Wednesday reflected Tuesday and Wednesday, and of course this latest Thursday and Friday. Derivative oscillator losing some energy. Price percent oscillator still up, really starting to move sideways, but we'll continue to keep our eye on that 2-day candle. Again, the weekly candle does look nice. And as we look at the 4-hour chart, what do we see? Interesting that the 4-hour chart actually peaked all the way back on Monday at noon, well, the morning candle, and then in the afternoon started moving down and sideways. Saw that in the morning on the 14th, Thursday. Then down Thursday afternoon, down Friday, up a little bit Friday afternoon. Remember, these are Heiken Ashi candlesticks. We're still in the negative on the 4-hour chart, and we see that the derivative oscillator is negative, as well as the price percent oscillator moving down. You want to know more about these Heiken Ashi candlesticks? Very, very important. They show the average pace of price movement. They are calculated differently than your regular high open, low close, as you see on your typical candlesticks. Heiken Ashis are different. Go to the training at chartingwealth.com, and we have probably the best training we've ever done, I think, is on Heiken Ashi candlesticks, and you'll understand why we use them. So that's where we are as far as the 4-hour chart goes and where things end for the week. So again, just continue to pay attention. We had a crossover going up way back on the 29th of September, moved up many weeks. The only pullback we saw was on the 17th, the week ending the 17th of November. And of course, the last 4 weeks now have been strong up movement, also very, very beautiful. If you just continued to ride the weekly trend line, getting in somewhere, around the 250 mark or so, up to 266.27. Is that not beautiful over the course of a month and a half, 2 months? It's just absolutely gorgeous in anybody's book. That's the power of the weekly vertical crossover. That's why we announce it and we pay lots of attention to it. Okay, on to the Qs, up 1.14%. What do we see going on there? Well, after 2 weeks of sort of down sliding sideways movement, we've had a week that ended up. Derivative oscillator, however, still losing energy. That's sort of a leftover from those 2 weeks of down sideways sliding motion. We do sit the price percent oscillator. The blue line has actually moved away from the red line, so that's a good sign of things continuing to move up. That is our master oscillator, our master indicator, and you want to know what the price percent oscillator is all about. Again, another good training at the website on the master indicator price percent oscillator. Please listen to that, study that. So we have an up week. That is what the weekly chart shows us on the cues. Now, as we take a look at the 2-day chart, does look like it's starting to move over, perhaps crossing over, going up. We've had that schizophrenia with the 2-day chart crossing over, going down after 8 days of strong, well, showing 8 days of strong movement. Into that 3rd and 4th day of down movement, we had the crossover going down, and we're still in a down, waiting for a crossover going up that might give us some entry points back into the cues. Now, those of you who are always looking for reasons to try to stay into trades, we had a number of things violated. We ended up having our 2-day trend line violated, and we had our weekly trend line violated, and only over the last few days has price movement moved above that weekly trend line. So whenever you have a crossover on that 2-day chart going down and trend lines being blown, that's a real warning bell. It did bounce back out, and again, we'll wait and see how things shape up over the course of the next week if there are potential trades. The 4-hour chart crossed back over, going up all the way back on the 8th of December. But again, in the morning, but again, remember, 4-hour chart's not the 2-day chart. We have to have the 2-day chart and the weekly moving in the same direction. And then, of course, we start paying attention to what's going on the shorter 4-hour chart. It is not our trading chart. The only place where the 4-hour chart works as a decent, very reliable trading chart is when you start looking at gold. So that's where we are on the cues, the NASDAQ 100. Let's go back to our weekly chart and let's move on to TLT. What do we see there? We see the week ended up on Friday up 0.38%, but overall in the week, nice up candle. Remember, we had the weekly vertical crossover back on the 1st of December, that week ending. So we had the jumping in point that following Monday, and now we have 2 weeks of nice up movement on that chart. We can see that over the course of the last week, the price percent oscillator kinked up, moving even more rapidly up, which is nice, moving away from the red signal line, and the derivative oscillator also gaining momentum. Quite nice. We look at the 2-day chart. What do we see? It's done the same thing over the last 6 days or so, and the derivative oscillator, well, the derivative oscillators moved up strongly along with the price percent oscillator. So that is nice. This latest 2-day candle, strong up movement. Beautiful from that jumping in point back in the 120, I'm guessing 126 or so range, something like that, up to 127.69. So again, that's not bad over the course of just a few days. And as we look at the 4-hour chart, what do we see? Well, of course, we had that crossover going up in the morning on Thursday the 14th, which of course was a jumping in point following the close of that candle. In the afternoon at around the opening at 127.98 and all the way up to 128.23. So that is quite beautiful. So anyway, that's what we're looking for. Remember, we're looking for the 2-day chart and the weekly chart to be moving in the same direction. Pull back on that 4-hour chart, picture perfect jumping in point, and you ride that baby ride. So we'll continue to see how long that ride goes for us profitably. The beauty of the weekly vertical crossover showing yet again. Lastly, we'll go to gold. What is going on with gold? Well, on the weekly chart, we have 2 strong weeks of down movement in gold. Derivative oscillator moving down, gaining downward momentum, and the price percent oscillator also continuing to move away from the red signal line. As we look at the 2-day chart, what do we see going on? Well, things over the last 2 2-day candles, so 4 days, Strong up movement we saw on that 2-day candle on the 13th. Not as strong for the 2-day candle ending the Friday on the 15th. An open box green candle. We'll continue to keep our eye on that. It has blown through the 2-day trend line, but the 2-day chart is not crossed over going up. But again, we just still have confirmed down movement on both the 2-day and the weekly, but do keep in mind that sideways sliding on the 2-day chart. Now, as we look at the 4-hour chart, what are we seeing? Well, we had the crossover on that 4-hour chart. As we start looking, that actually occurred in the afternoon at the close of the day on the 13th with a jumping in point on the 14th. And again, we're getting leery about where the 4-hour candle, the 4-hour chart might be going. Why? Because we're hitting that point where the gold, historically we found that 4-hour chart really stops working for us around mid-December to about mid-January, typically. So again, if you were using the 4-hour chart as a total trading chart, be very leery of that. Again, you can always use it in conjunction with our typical trading patterns where we see that the weekly and the 2-day are still in confirmed downtrends. If that 4-hour chart crosses back over going down, of course, feel free to jump into a down trade. Now, those of you not familiar with what we're talking about, in a case like this, you would be shorting gold, so you'd either buy an inverse gold fund, and many of those are not very liquid, so there's a big difference between the buy and the ask, and it might not give you really enough potential movement to do that, but you could always buy a put in gold. And when we say buy, we're talking about doing virtual trades, not doing actual real money trades, because we're not a stock calling service. We're an education firm. We want you to train with us, use all the things you've learned over the years that you have been exploring the market, reading, studying, practicing with us and others, whoever it might be, maybe just self-study on your own. Then once you get good at becoming a chartist, which is what we teach, and you can make successful trade after trade after trade after trade, then and only then might you consider in your own mind whether you want to spend your own money. We are not advisors. We are educators. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Hope that you are looking forward to a beautiful and lovely holiday season. Happy Hanukkah, Merry Christmas, you name it. God bless you. Thanks so much. Let us hear from you, cw@chartingwealth.com. And be sure, if you've not already signed up for our daily market reviews, please do so at Charting Wealth. God bless. All the best.